This is what you want to see from a leader. This is humility. This is good learning. This is good leadership. What's good, Courtside family? Your host, Obi here, Monday, December 1st. 2025. I hope everyone had a great Thanksgiving. I took the rest of the week off after earnings, but we're back now with some spicy news. William Lee just held a private media briefing at NIO's headquarters in Shanghai, and he said something that caught everyone's attention. When asked if there's a backup plan in case Q4 profitability doesn't happen, his response was simple. There is no plan B. No backup plan, no contingency, no hedging, just we're doing this, period. Now that's either incredibly confident or maybe incredibly risky, or maybe even both. Today we're breaking down what William Lee actually said, what it means for Q4, and whether this is bold leadership or if this is just setting up the markets and everyone for disappointment. This is Courtside Financial. Let's get into it. Let me give you the full context because headlines don't ever tell the whole story. On November 27th, 2 days after earnings, William Lee held a closed-door briefing with select Chinese media at NIO headquarters in Shanghai. Someone asked him if profitability targets aren't met on schedule, is there a plan B? And his response was, there's no plan B for achieving fourth quarter profitability. The company will spare no effort to meet this target and embrace all possibilities. Now let's unpack what spare no effort and embrace all possibilities actually means. Because this isn't just CEO speak. This is William Lee saying we're going all in, whatever it takes. Here's why this statement is significant. NIO just reported Q3 earnings. Net loss was 3.48 billion ren, the lowest since Q3 2022. Gross margin was 13.9, the highest since Q2 2022, and adjusted net loss was down 38% year over year. But they also revised Q4 guidance. The original target, as we know, was 150K vehicles, and they revised down to 120K to 125K. That's a 25,000 unit miss. So NIO is trying to hit profitability with lower deliveries than originally planned. That makes the margin of error for NIO razor thin. And of course, because of this, analysts are split. CMB International says NIO will likely miss Q4 breakeven. They project a net loss of 1.6 billion ren with a non-GAAP adjusted loss of 700 million ren. They cite challenges controlling sales and admin expenses. JP Morgan says NIO is poised to turn profitable in Q4 and reach a profitability inflection point in 2026. So when William Lee says no plan B, he's pushing back against the skeptics. He's saying, don't bet against us. Let me translate what William Lee is really saying here because there's always layers to his speech, it seems. Layer 1, focus. No plan B means NIO is 100% focused on vehicle sales and Q4 profitability. No distractions, no side projects, no exploring other revenue streams. Lee specifically said for a considerable period, we will remain focused on refining automotive products and working hard to build them and selling them. Translation, we're not launching a smartphone. We're not doing robo-taxis tomorrow. We're not pivoting to new energy storage. We make cars and that's it. This is actually smart. Too many companies lose focus chasing shiny objects, and NIO is saying we're here to build and sell vehicles and we're going to be profitable doing it. Layer 2 is this all-in mentality. Spare no effort and embrace all possibilities means that they're willing to do whatever it takes to hit profitability. So what does that look like? Aggressive ES8 deliveries, high margin vehicle, potentially pulling forward some of the January deliveries into December and cutting non-essential spending in Q4, pushing sales teams hard to close deals. This is the fourth quarter of a company trying to prove it can be profitable. Expect maximum effort. Layer 3 is the market message. Saying no plan B publicly is also a message to investors. They're saying we're confident, don't panic. Employees, this is the mission. Everyone's aligned. Competitors, we're not backing down. Skeptics, watch us prove you wrong. It's bold, maybe even reckless, but it's leadership. Now let's talk about what Lee also said in this briefing, because he wasn't just projecting confidence. He acknowledged real problems and real issues. Problem number one is the trade-in subsidies are ending abruptly. Lee said the abrupt withdrawal of the trade-in subsidies has significantly impacted the market, something the industry hadn't anticipated, leading to a sharp decline in new orders across the sector. This is important. Multiple Chinese provinces and cities phased out vehicle trade-in subsidies over recent months, and starting January 1st, 2026, new energy vehicle purchases face a 5% purchase tax instead of the full exemption that many are used to. That policy cliff created a pull forward effect. Everyone rushed to buy in October and November. Now December and Q1 2026 are much softer. Lee's response was, our strategy is to maintain price stability because we still have backlog and orders for models like the all-new ES8. Translation, we're not panicking and slashing prices. ES8 demand is strong enough that we can hold pricing and protect our margin. Problem number two for NIO is that most models are affected. Lee admitted all models except the NIO ES8, Firefly, and NIO ET9 have been affected. So the main NIO brand ET5, ET7, ES6, EC6, etc. is feeling pressure, but the ES8, Firefly, and the upcoming ET9 flagship are holding up just well. This is why the ES8 is so critical to NIO's Q4 profitability. It's their highest margin vehicle and demand is strong. Problem number three is that Q1 2026, no matter how you slice it, no matter which way you chop it, is going to be tough. William Lee said that the first quarter is traditionally challenging for the auto industry, but NIO still holds a backlog of so many ES8 orders. He's acknowledging that Q1 2026 will be rough across the entire Chinese auto industry. Post-holiday slowdown plus the purchase tax change equals weak demand. But NIO has ES8 backlog to cushion the blow. So the strategy shift for NIO has been quality over volume. Here's the part that I think is most important, and it tells you where NIO is headed long term. William Lee said NIO's business philosophy has shifted, no longer solely to pursuing sales volume, but focusing more on operational quality, with the core goal being annual profitability. This is huge because for years, the EV game was all about volume. Whoever delivered the most cars won. Tesla, BYD, everyone was chasing delivery numbers. NIO is now saying we do not care about being the biggest. We care about being profitable. That's a mature strategy. That's a sustainable strategy. That's what separates real companies from hype machines. Lee also said that NIO has invested heavily in foundational R&D over recent years. Chips, operating system, 900-volt platforms. The work is done. Now it's about iterating and optimizing, which cost way less. He said 2 billion ren in quarterly R&D spending remains sufficient to maintain NIO's competitive edge. So R&D is stabilized, no more massive ramp ups, just steady investment in staying competitive. And here's the kicker. Lee said through past exploration, NIO has recognized with just over 1% market share in China's 30 million unit annual vehicle market, the company lacks standing to consider ventures beyond automobile. Translation is it's corporate speak for we tried to do too much and now we're refocusing. This is what you want to see from a leader. This is humility. This is good learning. This is good leadership. So now let's talk about why you guys all came here. For my take. Is all of this bold or is it reckless? So all right, let's be honest here. Here's my honest assessment. The bull case is if NIO hits Q4 profitability despite lower deliveries than planned, 120 to 125K, trade-in subsidies ending, market-wide slowdowns, that would be massive validation. It would prove operational discipline, margin control, and execution under pressure. And if they hit full year 2026 profitability as guided, that completely changes the narrative. NIO goes from cash burning to growth story to profitable automaker. Now for the bear case. I know some of you guys are bears and some of you guys watch my videos. This part's for you. If NIO misses Q4 profitability after saying no plan B, That's a major credibility hit. Wall Street doesn't like missed targets. We all know this. Investors don't like overpromising and saying no plan B. That just publicly raises the stakes. If Q4 comes in with a small loss, say 200 to 300 million ren adjusted net loss, that's close, but it's still a miss and the stock could get punished, although I will be buying more. So here's my personal take. I think William Lee is doing the right thing by going all in publicly. Here's why. Number one is that it aligns with the organization. When the CEO says no plan B, every employee knows this is the mission and there are no excuses. Number two is that it forces accountability. You can't say no plan B, then make excuses if you miss. It creates this pressure to execute. Number three is that it shows confidence in the plan. If management didn't believe they could hit it, they wouldn't say this public. But here's the risk. If they miss, the narrative becomes NIO overpromised again, and that damages long-term credibility. My prediction is that they get very, very close. Maybe slightly profitable, 100 to 200 million ren, maybe slightly negative, 200 to 300 million ren. Either way, it's basically break even, which in my book is huge progress. So what to watch? As we head into December and Q4 earnings in late January, here's what I'm looking for. Number one is December delivery numbers, which should be announced January 1st. NIO needs roughly 79K to 84K combined deliveries in November and December to hit 120 to 125K Q4 guidance. If December comes in strong, that's like 45K plus, profitability is likely. If December disappoints, that's 35K or less, profitability is certainly at risk. Number two, what I'm also looking out for is going to be those ES8 deliveries. Management said ES8 will deliver 40,000 units for the full year 2025, with the majority in Q4. ES8 has 20% plus margins, guys. So if the ES8 hits 25K to 30K units in Q4, that's massive gross profit. Number three, what I'm looking for is price holding. Lee said they're maintaining price stability. If NIO starts discounting heavily in December to hit their volume targets, that kills the margin. And of course, that defeats the purpose. So guys, watch for any incentives or promotions. Number four is Q1 2026 guidance. When Q4 earnings drop, management will guide Q1 2026. If they guide 100K to 110K deliveries for Q1, that's conservative and realistic given the tough market. If they guide higher, that's aggressive and could set up another miss. All right, family, it's Monday. I got to get out of here, but that's the breakdown. William Lee said no plan B. NIO is all in on Q4 profitability. Is it bold? Absolutely. Is it risky? For sure. Is it the right move? I think so. December delivery numbers drop January 1st. That's our first indicator. Then Q4 earnings in late January. That'll tell us the full story. For NIO bulls, this is the moment. This is what we've been waiting for. Execution time. For skeptics, this is your chance to be proven right or wrong. Either way, no plan B means we're about to find out what NIO is really made of. This is Obi. This is Courtside Financial. Let me know what you think in the comment section down below. Stay focused, stay objective, and remember, no plan B means that all chips are on the table.